Fi. All right, welcome back, everyone. It is our Monday Make It Count with Cody Davis. And I just want everyone to know the Bears did win this past weekend, 19-17. So we're first place in the North. But we've got a special guest on. We got Ike Hobbs on today. So morning, guys.
Morning.
So Ike, quickly, introduce yourself real fast, and then we'll dig into Cody's most recent video.
Yeah, so been on here a couple times, but it's been quite a while. I live middle of Kansas, almost middle of nowhere, got a small city, and then I've got a few rentals in a small town nearby. That right now I've done Burr a couple times, still working on a big Burr project and self-manage and just slowly growing.
Very cool. And you're originally from not Cody area, but Pacific Northwest, right?
No, I grew up in Kansas, actually. I did live out in Washington for about 5-6 years, and then moved back here in 2020. So,
all right, very cool. So Cody, like I said, everyone that doesn't know, Cody does put out videos every Tuesday and Thursday on his channel. And what I like to do is kind of dig into some of those videos on Monday, because a lot of times he says he just puts it out there, doesn't really watch it after, and it's just out for everyone to see. And so, yeah, your last one on, I believe it was Thursday, you did one about zero interest may not be better than having maybe an interest payment or 6% interest, right? So it's kind of a Dionism kind of thought, or I said it's a Codyism now. So maybe explain that video a little bit.
Yeah, well, I actually just brokered a deal for someone, which made me think about that structure. They bought it 0% interest on a duplex, but the way they wanted to structure it to get the 0%, the incentive for the seller, other than the price, was they were going to amortize it over 4 years. And for those who've been in real estate for a while, they know that a 4-year AM doesn't cash flow. So they got over $8,300 a month payment on a duplex that rents for $1,500 a side. Now, my point in the video was, would you rather pay no interest and have an $8,300 payment where before taxes, insurance, utilities, and all that, you're cash flow negative over $5,000 a month? Or would you rather pay 6% interest only on the same price and actually be cash flow positive? Now, in the example I gave in that video, I think I was thinking of an apartment deal, but that was a real example that just happened. They bought it 0% interest. It was a fixed, very large payment, and it was a negative cash flow, but they weren't paying interest. My thought would be I'd rather pay interest and actually earn a dividend, not pay for the real estate myself. So that was the idea there.
Ike, I sent you that. Did you get a chance to take a look at that, or do you have any questions for Cody on his thought process on that? Or
no, I think it mostly comes down to what your goal is and what you're doing with your money. So I know the 50-year mortgage thing's been talked around a lot. Like for me, if I don't want to pay cash for things, because I don't have a lot of cash sitting around, but also like my goal is spread everything out for decades and cash flow and keep the money that I do have just turning in and working on the velocity there. But if somebody has the cash to float instead of $8,300 a month, like that's quite an investment, but if it works for them, it works.
I think the biggest thing, and even Dion talks about, we're all, I think Cody and myself, I think we're always trying to help the people that are maybe sitting on the sidelines or trying to get started. And that's why when they see that title that of Cody's video, they probably really don't understand where he's coming from. Like, that doesn't make sense at all, right? Like, you're always trying to, a lot of people, like in school, you always see the question, like, interest rates, and that's the one number, like, they're always focusing on, right? And they're not really factoring in the other parts of the transaction or what makes the deal work, right? So Cody, was that kind of where your thought was coming from also? These people are always looking at interest rate only, in a sense, to make a deal work.
People are honing in on one thing more so than another. Whether it's interest rate, whether it's price, people find the thing that's going to be the reason they don't do it, and then they don't do it. And I just want to break those myths one day at a time, as do really everybody in this community. It seems like they're putting out content to try and break those myths. Dion just put out a myths that'll keep you poor video too. But focusing on the interest rate is dumb. like on a bigger example, let's say you could have a 0% interest loan, but the payment's going to be 10 grand a month, or a 6% interest loan, and you're going to have a $5,000 a month payment. If you're buying the same deal, if it doesn't make enough to cover the 10, I'm rather pay the interest. You got to do the one that you can actually see all the way through, because if you don't finish your project, you don't get the payday. You might
So Cody,
save on interest, but you lose the golden goose.
Were you representing the buyer or the seller in this?
I represent the seller.
So do you know, is the buyer just planning on refinancing in 6 months and getting out from under the seller finance, or?
No, they're going to pay it off. They're going to pay $100 grand a year with no interest for 4 years and have it paid off. Their notes for $400,000 in that example.
Yeah.
They're going to fund it out of their business. They don't want to borrow interest, and so they did it that structure to avoid the bank.
Cody, I know, like for those just tuning in, like I said, we're kind of discussing one of Cody's recent videos about 0% interest may not be better than 6% interest. And I think in that video, you also touched on it was you paying off your car payment, I believe, right? Or paying off your car. That's kind of where this thought process came in, right? So you want to dig into that a little bit also?
Yeah, I've gotten a lot of comments talking about that in the past. It's a 3.24% APR. I mean, it's super low, and still want to pay it off. And the reason is the amortization. Again, it's the same reason I wouldn't borrow at 0% in that example. I wouldn't want an $8,300 a month payment on a duplex that makes $3,000. It's all a function of cash flow. I mean, you can look at interest, but you could be paying more interest and retire sooner than someone paying less. If all of someone's debts were on a car and they're at 0% interest, and all of someone's higher interest loans were on real estate, the real estate person could retire before the person with a similar amount of debt at 0% on cars and personal stuff. It's all about what it gets you. So the reason I'm paying off the 3.24% car interest loan is because it's a relatively high payment to the amount of money that I owe. So I've done a video in the past about what a factor rate is, your cost of capital. Regardless of interest rate, what's your monthly outflow? It's principal and interest on an annual basis divided by your loan amount. As a percentage, it shows your actual cost of capital, accounting for amortization. And I get to free up a large amount of money every month by writing a relatively small check to pay off the car. So it makes a lot of sense. So that's why I did it. But there's going to be some people out there that said I should have borrowed at 3% and invested the difference. There's no investment I know of where I could have made that amount of cash flow with that little amount of money. So it made sense to pay it off.
Nice. I do see Dion tuning in. And like I always say, Dion has his Dionisms. And now we're going to have Codyisms, Dion. So Cody is making people think a little bit different. His recent video on Thursday was about 6% interest could possibly be better than a 0% interest, right? If you look at it from a different way or a different point of view. So definitely interesting video. Did you get a lot of pushback on the video? Because I did put out a short of our video, a clip of you talking about the 50-year mortgage. And already there's been a little bit of pushback on that short on my channel. But has people commented on your recent video from Thursday?
There are some people that did comment, yeah. And my videos are finally starting to get a little bit more engagement, which is really cool. I think that's from the ORAC community.
No, that's when you start getting the negative ones like Dion and Zuber, then you know you've made it. But Ike, what about you? I mean, in the beginning of your journey, do you think you're only looking at like interest rate also in a sense?
No, not necessarily. Mine's much more focused on how little I can put into a property. So my first duplex was the FHA house hack, and I got a really good interest rate. And one of the reasons I pulled the trigger was rates were starting to go up, and I kind of figured they would go up. quite a bit, which they did. So I got low threes, I think is what it is. But um, all that I'm primarily focused on is the velocity of the cash that I have. So as little down as I could put into that place, it still cash flows, still does good. The next one was the next one would have been a burr, and I paid an insane interest rate on the hard money loan for 6 months, and then when I refinanced that, it still wasn't like a great rate when I refinanced it, but it worked out good, and I got to take most of my money back. I didn't get it all back out, but I'm not as focused on the interest rate. Like I try to be wise about that. I'm more focused on how much cash I can get back, so I can go back to the next project.
Very true. And I think, a lot of times too, everyone sees like, maybe on social media, there's a post like, oh, this company is providing like a 5.5 mortgage rate right now, right? And everyone's like, oh, what, 5.5? And they start reaching. But there's terms, right? Like I think, Cody, you're talking about, there could be different fees, costs, what's the loan to value, what's the DSCR ratio, whatnot. So there's other factors involved. So they get caught up with this rate, but they could end up paying more, right? Too, Cody?
Absolutely. Yeah, and it's all in the terms. I mean, what do you actually make at the end of the year, right? And you could get a lower rate, but if you have more money out, it could be a couple of years before you actually break even on that extra spend. And you got to look at that, and it could still be worth it. Similar to that, Janitor on Fire put in something about recasting a loan. I like that topic a lot, actually.
Yeah.
Deanna and I are different on that thought process.
Interesting. Okay, so Janitor on Fire does say, anytime I consider recasting one of my properties, I remember Dion talking about the reamortization front loads the interest again, even if the payment goes down. So sounds like you have a different maybe view or thought on this a little bit.
Yeah, let's chat about it. So Dion doesn't lever up his properties again to buy more. If he wants to get a higher leverage, he buys more properties. And so I really like that. It's very refined. The thing is, his whole thing is cash flow. And one of his biggest mistakes he's talked about was paying off a property. So the idea of worrying about paying more interest because you're front loading the interest again, of course, you're resetting the payoff clock. So now more of your payment will be allocated to interest. But look at what the goal is for Janitor on Fire. My thought would be, if you can increase your cash flow on long-term fixed rate debt, as long as you're not going from like 2% to 6%, right? If they're comparable interest rates and you can lower your payment, you are that much closer to freedom. If the biggest mistake from someone was paying off a property, don't worry about paying it off slower. Now, again, if this is on a personal house, probably not. You want to get your personal liabilities handled. But on an investment, your tenants are the ones that are going to pay for it, as long as you've done your numbers right and you're managing it correctly. That's the other piece. The tenant should be the ones, those incomes should be paying for the obligation. So if you could lower your payment $300, so what if more of it's going towards interest every month because you recast the loan? You're $300 a month closer to financial freedom if you're not already there. And if you're already there, then maybe it doesn't matter. But from my perspective, anytime I can increase cash flow, even if I go from $1,000 payment to a $700 payment and a little more of that payment goes towards interest, who cares? Because you're not the one that's going to pay it off over the long term.
Ike, any thoughts on that?
Yeah, I think it really depends on where you're at in your journey. So Coach Carson has, his maxims there of like growth mode, harvest mode, and then sometimes just a steady wait and see mode. And so if you're in growth mode, then no, I think you want as much cash as you can coming back to you, so you're not wanting to worry about that interest rate. But if you're in harvest mode, where you're just sit there and slowly accumulating more wealth, but you're not needing that cash and don't want to work to put that cash to work, then that's maybe when you want to focus more on the interest rate. But it really comes down to what kind of growth mode or harvest mode or where you're at. So a lot of people I talk to, especially with my job, they're not wanting to spend a lot of time on real estate investing. So they'll buy a house, they'll buy a duplex here and there, but they're not trying to get financial freedom. They like their job. They're not trying to grow real big. They're just doing it as a smart way to park their cash. And so for those people, that interest rate and some of those ideas become a more important play. Whereas, for me, I'm working probably more on real estate than on my full-time job. So I don't really care about the interest rate. I just need more cash so I can go do more deals.
Dion also adds, now recasting or refinancing to a lower rate both work for me. It's cash out I don't like. Thoughts on that, Cody?
I think that's a great place to be in. I am too cash poor to do that right now. And Dion's going to tell me, well, that's why you're going to be cash poor next year too. So he's absolutely right. But to caveat that, I will make him proud. I am listing my 39 unit and I have a buyer for my 27 unit. I'm going to 1031 that into brand new construction, smaller properties. So I should be consolidating in the next 12 to 18 months from 130 rentals down to like 50 new ones. That'll be easier to manage.
So Dion, hopefully you heard Cody say that. It's going to make you proud. I'm sure Dion is very proud of you. I'm sure of that, Cody. So, but let's see. I'm going to skip over Mick's question real quick. We'll get to that, but I know because you mentioned birds earlier, but Charles McCune is saying, well, he's saying it to Dion, but maybe you can chime in on this. He says, how bored do you have to get to do another burr? So Dion chimed in the other day on the live stream, and he said the burr, the last R stands for regret, and most people don't acknowledge that. So, do you have any thoughts? I know burr is part of your strategy. Do you want to add anything to that?
I mean, you do what works for you, and you do what works in your market. So one of the advantages I have where I live is there's a lot of rundown, older buildings with people that don't want to take care of them and don't want to restore them. So I've kind of found a nice little niche of being able to come in, buy it, fix it up, and hit a middle market where I'm not a brand new apartment in the town, but I'm also not the slumlord. So people really like that. They are a lot of work, but so about 3 years ago when I really started doing into this real estate, what I looked at is like I didn't have a lot of cash, but I had a decent amount of time and some construction skills. So that's what I'm using right now. I don't anticipate in 10 years to do a lot of burrs, but right now, while I have more time than I do have money and can put that money to work better on burrs, that's what's working for me. They do have a lot of headaches. Like I just got off the phone this morning with it's a small town that these are in. I got off the phone with the city inspector who wanted to do a walkthrough on Friday of one of my units, and he couldn't prove to me that he had the authority to do that. But at the same time, I'm not going to stop him because if I throw a fit about him doing it, well, he'll just stop me on another project. So it's kind of one of those things that you deal with a lot of headaches doing the construction work and things like that. But I'm able to kind of put that to work for me. So if I had a lot of cash sitting around or if I had a lot of income streams, then no, burr probably wouldn't be my thing. I'm a big fan of what Brandon's doing with the build to rent. I'm hoping eventually to move more into something along those lines. But for me right now, where I'm at, the burrs, something I can do and can do pretty decent. So
quickly then, since you did bring up build to rent, so like for your area, would you be looking there, and like what is the kind of permit process for your market? Because I know Dion also touches on that, right? People want to do build to rent, and then they don't realize maybe the permit process or the issues in their area, right? So for your area, how's the permitting for your market?
permitting is very, very easy. So this is so like I'm familiar with what Dion's talked about. Now he's fighting Port Orchard and can't get answers, can't get them to talk. I literally called the head city inspector this morning on the cell phone. I tell him what address I'm at. He knows exactly what's going on. It's more about who you know down here and not taking people off. yeah, there's permits that you would need to do. I haven't built anything, so that's a little different, and I think that'd be a little more complex. So there'd be more issues with that. But when it comes to getting permits and things like that for the reconstruction and remodeling that I'm doing, it's a pretty easy process. My biggest issue is that I'm not a licensed contractor, so when I go in and try to pull a permit or things, they don't really like that, even though I own the building. So sometimes I do have to get a licensed contractor in there to do some stuff that I'd rather do. But that's also helping me back out a little bit and pay people to do work, which is what I'm trying to get better at.
And I believe, did you just meet up with Brandon? Did you guys have coffee? I think was that.
No, we're supposed to at the end of this week.
Oh, this week. Okay.
Yep.
So let's see. Mick does have a question. He says, "How many of you had paid points? When is it a good time?" So, Cody, for a long time, you didn't have any bank loans, right? So, have you paid points for any of these loans that you've done recently?
Yeah. Yeah. But that's on commercial. Like they're charging a fee without buying down a rate. They're charging a fee, and different banks are going to charge different fees. Like Columbia Bank right now, formerly Umpqua, they're at 0.7 points. So if you borrow $1 million, they're going to charge you a $7,000 origination fee. If you use a mortgage broker and they help you find a bank, you might pay 2 points of fees for sourcing the commercial debt. So that could be 20 grand on $1 million loan. But on residential, I'll still pay points if it gets me where I need to go. I mean, it's all about the end product. If you can get a long enough term debt product that allows you to cash flow and you're not stressed about the asset, great. If it's worth it, pay it. And I'll definitely pay fees to a mortgage broker to get it done. But that gets paid at closing, and you're not paying that up front.
Ike, what about you? Paid any points, or like, do you have any thoughts on when it is a good idea?
Paying points, especially if you have the seller negotiated to give you credit back at closing, and then the lender won't let you take it. That's a great process there, where you can have them maybe pay down the interest rate. But again, my strategy is more cash back, so I don't really care to pay down a little bit. I anticipate remortgaging everything in my portfolio probably in about 5 to 7 years. So I'm not really interested in, I want the fixed rate, and I'm not real happy when I don't get that. But at the same time, I'm not real interested in fixing something out for 30 years and having someone pay cash for that doesn't go to my pocket. So also,
Yeah.
if you've got the cash, then that's a different question. So it could be really good for long term, but not really worth it if you're gonna refinance it in 5 to 10 years anyway.
Yeah, absolutely. I think there's a lot of it might depend on how much reserves you have, right? If you're going to be tapping into reserves to pay it down or pay points, there's a lot of other factors, but it also has to come down to how much you're saving, how many months it'll take you to regain that money back. Because typically, money today is worth more than money tomorrow, so you want to hold on to that money if possible. And then you can always look into what kind of rate environment we're heading into, right? So a lot of times, like right now, people would probably say, "Oh, we didn't pay it now," because if you're possibly looking at the way the environment is, we're probably trending towards possibly lower rates. So those are just some factors to consider before wanting to pay down for your rate. But like I mentioned too, if you can get the seller's concession to pay for it, then that's a different story, right? So
yeah.
Let's see what other questions we got coming in. Of course, yeah. Charles says, Dion said he would never do a burr, and he also said he'd never remarry. Freedom Works says, I can't remember how long it's been since I've had any type of debt that hasn't been real estate debt. And Dylan, I think, Cody, this might be a good thing to touch on too. So Dylan talks about, it sounds nice. I've got a bunch of 0% credit card or credit lines to pay off from renovations. I believe before also you've touched on having maybe 0% credit cards also to use in the beginning of your journey, right?
Yeah, I used to have a lot. I had multiple 6 figures of 0% credit cards. So they've since paid off all but 10 grand maybe. And there's a time and a place. The time is if you really need it. If you really need it, then you use it. but that's a dangerous game to play. The way I look at it is if you have a year of zero and it takes you 2 years to pay it off, if it jumps to 22% or whatever it is, your cumulative would be 11% a year. So is it really that bad? No. Is it a great business model for the long term? Also, no. Have I still done it? Yes.
Let's see what else. Nothing. I know, Ike, you may have had also some questions for Cody, right? That you wanted to bring up. We can still talk on the interest if people want to put more comments in the chat, but I know Ike, you did have some questions for Cody, right?
Yeah. Just real quick to circle back to that original example you had, Cody. If you're representing the seller, if that buyer had come in just full cash, how much less would the seller have taken?
40,000.
40,000 less.
Mm-hmm.
So that's just something to keep in mind too. When, like you were talking about with zero interest rate, really they're going to pay basically 40,000 in interest over that 4-year term, which isn't terrible, but it's not great either. So I think sometimes we get locked into like what works for us and don't realize where other people are. And it's something to keep in mind, just to be creative and say, hey, what do I have? What are my resources? And then work from that angle. So for that buyer, maybe they're more than happy to be like, hey, I've got that money sitting in the bank. I just don't want to spend it all right now. I want to keep some in reserve. But it's also possible that they're walking away going, hey, I made the seller give me an interest-free loan, not realizing they could have got a lot less if they just paid the whole lump sum up front.
Correct. And the seller's happy.
Yeah, I would be too if I was that seller. So, because that reduces their tax payment too, unless they're doing something with it. But.
Ike, you had your questions for Cody?
Yeah. So, Cody, one of the things I've been interested in following your journey. So I know at the beginning you had a relationship with a mentor starting out, and I'm just curious how you view that further along in your journey with mentorship. And do you still have mentors that you talk to regularly that check in on you, or what does that process look like for you?
Yeah, and that's evolved. A lot of my mentors now I owe millions of dollars to, not because they've lent me money as down payments, but because they've seller financed their properties. So I've learned a lot from the people that have sold me real estate, and I've kept in touch, built that relationship up. So some of my mentors I'm paying 5 figures a month to in just interest payments because of the amount of properties that they've sold me on contracts. I've adopted and modeled out some of what they've done, and I omitted the stuff I didn't like because nobody has a perfect business model, and anybody that says they do doesn't know something. But that I take the best pieces from their story and I omit the worst, or I learn from them. And in the process, we've grown close as friends, and they continue to sell me properties, and I'm buying townhomes from them right now. And there's some other people in town that have sold me a lot of the older apartments that I've grown closer with, and I've been fixing those up. So it's been pretty cool. But yeah, definitely have mentorship. It's very important. And if you think you're above that, which some people do, then you probably got a long ways to go.
So what does that look like for you? Like, are you checking in with them on a weekly basis, monthly basis? Are you just random conversations as issues come up, or?
I'm on the planning commission with one of them. So I'm most like planning commission. I became a planning commissioner a few months back at their recommendation. So we keep in touch on that. And then the other one, we have dinner with them probably once a month. I see him in town, and him and his wife. If I have problems, I run it by him. If he has problems, he'll run it by me. And we just keep in touch when it makes sense. But if he ever goes out of town, I'll help him out. If he needs a ride from Seattle because he's flying in from somewhere, I'll go pick him up. It's like that.
I want to say thanks to Dion for the super chat. But he does say, what currency scares you the most about real estate?
Is that supposed to say currency or currently?
I would think currently.
That's what currently. Right? Cody, you want to?
Or maybe it is currency. Maybe he means like, are you afraid of cash or personal check? Maybe.
Nah, I would think currently. I think currently. We'll go with currently.
Okay.
So,
Okay.
Cody, you can go first then.
Well, I'm shifting my whole business right now, so I'm selling out of the old stuff into the new. What currently scares me the most is he did say currently. So what currently scares me the most is still the same as before. It's the capital expenditures that pop up along the way. Every once in a while, I get a random $8,000 plumbing bill, $12,000, $15,000 hiccup that I wasn't expecting, because you have over 100 rentals that are all built in the 50s to 60s. There's going to be issues, and so those random expenses magnified at that level is awful. And I knew that going in to some extent, that there was going to be a lot of fix-ups, and you learn more as you go. But it's expensive. So one thing I'm doing to combat that is to sell the old stuff at a little bit of a discount, take the money that I've got and throw it into probably half that size portfolio, but all be built within the last decade. And those will have their own challenges, but having less is more sometimes. And now that I don't have partners on a majority of my assets, get to 50 townhomes, and that's going to get rid of that fear factor in my portfolio.
Ike?
I mean, not really scared about anything related to the market. I've got things in my life that I'm trying to get better at, and I've got flaws and things that I've got to improve at. But the market as a whole, I see being pretty steady, and I think kind of, in my opinion, bottoming out and probably slowly on the growth back up. So I think the one thing that I haven't had to experience yet in real estate, and I'm still nervous about, is if I have to do a full eviction. I've only had to give a notice once, and they moved out. So an eviction and bad tenant, like those are things that like I think about every once in a while, but they don't keep me up night.
I think for me, and it's not so much, I mean, I guess it is somewhat related to real estate or the market itself, but I guess because I'm doing this social media thing and the channel and trying to get people to maybe get off the sidelines and do something, even invest with us in Pittsburgh. I think my maybe fear is that maybe the market does change or does go down, and then now these people that have maybe jumped off the sidelines because of my nudging or pushing a little bit. That I think that's my fear, is that something happens and now these people that maybe did take action, maybe on some of my, I don't know, advice or just, like I said, maybe nudging, but just from that standpoint, just, maybe they did stuff that they weren't comfortable with, and, but that would be my fear in this situation. Jen has a question. Says, how would a busy W-2 person with young kids find a mentor? Asking for a friend.
Well, you can go to a real estate meetup and then know that 90% of the people there are fluffing their stuff and BSing a little bit or a lot of it. But you could find the 10% that are actually doing stuff. Most real estate investors are busy, either with a business or their real estate or their job. Most of them aren't just chilling. Dion's in the 1% of the 1% there, the lazy way. But you go to those events and network, even if it's just once a month, you'll find someone. And maybe you meet some people that are talking it up, and then you learn they haven't done a bunch, but they know someone. A lot of people like that. You get connected to someone who owns one property, and they connect you to a person who owns 100 or 10 or 5. And that's what I would recommend doing if I were you.
So you'll meet Jen at the Vegas event in February. I'm sure you'll hear her, but she is very personable. She's out, but I think her question relates more to maybe trust, like from finding a mentor. So not so much about talking to them or connecting, but how do you get over that fear of getting ripped off, I guess, in a sense, or the trust issue? So maybe you can touch on that a little bit more.
Oh, yeah. Well, learning from someone who's definitely been ripped off by mentors before. Look at what they've done, not what they say. I met with Grant Cardone a few years ago at one of his events. And what he told me in passing, because I stopped him at his event and asked him a question, he said, look at what I did, not what I say. People would brush that off. That was the one takeaway. It was one thing that stuck with me, because he says a lot of stuff. But if you look at what he did, he built a portfolio of about 5,000 units without syndicating before I did the whole syndication route. Look at what your mentors, look at the potential mentors for what they've done, not what they're saying. So if they're saying, well, you buy this, this, and this, is that what they actually did? Have they done anything? One of my first mentors was saying buy multifamily. And what he ended up doing was he bought a bunch of condos and lost them all. They said condos are bad. And after that, he said, buy a bunch of multifamily. He bought a bunch of offices. And to date, I know he's lost one of them. He still says buy multifamily. Now he's doing syndication stuff. More power to him. But you look at what he did, you can learn the lessons. And you could figure out if he's going to be a mentor that shows you what to do, or be like a lighthouse that shows you where not to go. Because if you boat to the lighthouse, you get the land, right? So you got to have a mentor who can do both. He was a mentor showing me where not to go. Bridge debt on non-performing assets. It wasn't the condos were bad or the commercial was bad. It was the debt structure he did was bad. He'd do anything he could to get into a deal. And so as far as the question of building trust, look at what people have done. If you don't like what they've done, or you can't establish that they've done anything, they're not going to be your mentor. They could be a drinking buddy or a friend or a coffee, a tea friend, whatever it's going to be. But if they haven't done anything to show that they know what they're doing, they're not going to be a person you should look up to.
Thoughts on that? Yeah.
Yeah, I'll take a little bit of a different tack on. So I've got a W-2. I don't have kids, so it makes it a lot easier for me. I've got a good schedule for this. But I've been around these meetups for quite some time. I've met a lot of fake people, and I've met some fantastic people. So if Jen's wanting someone local, I'd say, yeah, definitely hit the meetups, but you've got to go multiple times. You've got to go at least 3-4 times in a 6-month period at least to kind of be there, establish, and say, hey, I'm serious about what I'm doing. I'm serious about wanting to learn and make connections. So every meetup I go to, there's always 2 or 3 people that are like brand new and gung-ho and have all these grandiose statements about what they're going to do, and then you never see them again. And so if you show up the first time, kind of wonder why no one seems to be real interested in you being a young and eager starter. It's probably because the serious people are like, yeah, we've seen this a dozen times already this year. So show up, be a part of it, talk to people, make connections, but do it consistently, and you have to do it for a while. Nothing good ever comes easy, at least in my opinion. So if you're wanting somebody online, if you're wanting even local as well, I'd go back find the Facebook group that people are involved in. I think most good meetups, most good cities have investing real estate groups, and then just go through the history and see who's answering questions, who's getting tagged a lot. When somebody asks a question, what are other people tagging in it? And if they're tagging one person quite a bit, even if you don't see them answering, what they're probably doing is going around on the back end and providing good answers. They're just not bothering to put it all out there to the public. And then you've got to find a way that you can add value as well. Busy people that want to show off and maybe have a lot of fluff, like they're more than happy to talk to other people and make it seem like they're really important. But the people that are actually doing things and actually accomplishing things, they're really busy, their time's valuable, and they don't want to waste it on a dozen different people that just want to ask questions, take them out for a fee, and then never do anything again. So you figure out if there's something related to real estate that you can help with. But if you're really busy and maybe you're just barely starting, I'd say go to the meetups, but go multiple times. Don't expect it all to happen in the first couple of times. You got to be there multiple times. Find out who the good people are. So.
And if people don't remember, Ike was probably on my channel, man, like what was the first time? Like over a year ago. But I think the kind of the main topic, main focus of his story was, I guess he felt he was an introvert maybe a little bit, or it was difficult for him to get off the wall and talk to people. And look where he's at now, right? Willing to come on live streams and share what he's doing and talk about what he's doing. And so I think, that he's just a great example of getting out there and putting yourself out there and talking to people and just reaching out and seeing who can help you and how you can provide assistance or something to someone else too. So like I said, man, you're doing a great job, and thanks for all the support and thanks for coming on and stuff like that, right? But you've come a long way. Like I said, I think in the beginning, you said it was like, you're right, it was hard for you to kind of get off the wall. Like you're always standing in the corner, right, in a sense.
Oh yeah, but I don't know, one-on-one conversations, one-on-two, like those things I'm good at. It's when it's a big crowd of people that I'm like, hey, that's not really my cup of tea. So if I make it out to Vegas, like I'll be.
What do you mean if you make it out to Vegas?
I gotta finish up this project first, so we'll see what happens.
All right. Well, I do have to wrap it up soon. I forgot my son has JPO duty this week, so I got to get him up. He has to get to school earlier. But I did bring up Vegas, and I don't know if Cody, we can touch on that real quick. Cody is speaking in Vegas. Zuber also mentioned that he has 20 spots available. I'm not sure how many he has left, but he had 20 spots available for kids, teenagers to attend with their parents for free. And another part of it is Cody is offering, I believe, one-on-one sit down with these people, right? So what are you hoping to talk to them about or share with them, or what are you hoping to get out of it? Or give to them, I guess I should say.
Yeah, I mean, the main thing is my speech intro presentation is going to be how to get started regardless of where you're at. And it's the only presentation I'll be putting any thought into because I always wing it, as we've talked about. So I want to be as intentional as I can in those one-on-ones because the next generation, right? I mean, they're going to be the next generation slumlords or renters or property owners, movers and shakers. It depends on the input that they get. And so I want to be as intentional as I can to give them the best practical steps based on where they're at. Because some of those kids might be coming from families that have no rentals that want to get there first. They might be coming from families that have a bunch of rentals. Both of those are very realistic at an event like that. And so I'd like to give them intentional advice based on where they're coming from. Because it's cool to make a presentation that feels good to everybody and is practical to everybody. But one-on-ones should be designed for the exact situation. So my goal is to give that, whether they're 15, 18, whatever age they are, practical steps to move towards whatever they think they want. And then when their goals change, how to hit those.
Very cool, man. I think you're such a giver. Like I said, I think the community relates really well to your story, and you're giving a lot of great information and transparency out there. Ike, like I said, man, you got to get to Vegas. And I just want to, Janitor on Fire, I guess I'm assuming the Cowboys must be playing tonight because he says, don't forget, must see football tonight. So if you want to, I'll just put this up here then for you, Janitor on Fire, just to let you know that the Chicago Bears are first in the NFC North. So that's just for you, Janitor on Fire. But thanks for tuning in, Janitor, because it's been a while. I haven't seen you here in a while, but you've been back. So thanks for all the support. But Ike, man, I'm telling you, man, you got to get to Vegas, man. Let's meet you in person. It'll be a fun time. Me and Cody has had coffee before, so I have met him in person out in Hawaii. But sorry, everyone. Like I said, I forgot my son had JPO, so I got to cut it a little short today. But me and Cody will be back next week, Monday, same time. I will be back tomorrow, same time with Brandon Potts and Justin Canberra is back. He's back from Hawaii. He's back from his trip, so he'll be on tomorrow. Justin Canberra and Brandon Potts tomorrow. So everyone, thanks for tuning in and thanks for the support all the time. See you. Bye.